And we're live, episode
Right.
7.
Wow. I really hope that, so first of all, Andy is not here to monopolize the time. Thank God.
I think Andy might speak the least,
He
actually.
definitely does. It's
Yeah.
funny.
You're doing,
I don't know if you guys use his product, Val, but he actually
Yeah.
has on the top,
Yeah, it's
whatever,
awesome.
like the percentage of time that people talk. I'm
Mhm.
always the one that has every meeting. I'm always the one. It's 50% I'm talking.
but in your company, do you mean?
Yeah.
Yeah. Yeah. It's your company.
don't know.
Is that good?
I don't know if it's good or not. I got a
Mhm.
lot to say. That's for sure. I'm not
Yeah.
sure that's a good thing.
Or to find ourselves talking about him. And a lot has happened this week. Has been a crazy
Yes.
week as it relates to startups. And so first of all, everyone is obsessed with AI companies, which is, I mean, they have been
Yeah.
for the past
Which is
like,
what we're all
years.
building.
Yeah.
We're all building AI companies, right?
They are now, but yeah.
Yeah.
I think Andy technically is. He's building on top of AI.
Sure. Yeah. And he,
Yeah, but it's
he's
not
the
an AI
most
company
upset.
though.
Yeah.
Yeah, it's
I
not an
mean,
AI company though. I wouldn't consider it.
we're not getting AI hype machine valuations. It's interesting sometimes to be in this. The closest that I've been to a company like that is being close to Clubhouse in the early days and
Yes.
seeing that experience of what that experience was like as it went from literally just a couple of people in a room, literally in a room during pandemic, to 100 million, which at the time, of course, felt pretty big, to 1 billion, to 4 billion, to whatever they're grinding now because they have so much money. And so I can't imagine being at the center of a hype cycle like that. And
Also
wondering,
having that much cash now. What do they do right now?
dude, first of all, Clubhouse is still a thing, right?
It is a thing,
People,
but like
people use it, right?
But like, what do they have? Like $100 million on, and then they're on the balance sheet that they're
Maybe
they're not.
I don't know
probably
anymore.
scaling.
I don't think that I don't think that I really know, but there's no doubt in my mind that what you do, I've seen a couple companies do this. I remember back in the day when Cinemagram was doing kind of a version of what Vine did. I remember them because they were in Montreal. It was a Canadian company. And then all of a sudden Vine took off and got bought by Twitter. And so their thing that had been skyrocketing, a company skyrocketing like that, it just ends up with all their capital is still there from the last financing. And then all of a sudden their traction is cut off. And so I've just never been in that type of situation. And I think you just grind as the founder. I think you just grind it out.
It must be hell. The pressure you get from your investors and late stage investors, they're not. I had a version of this at Shyp where we were trying to pivot internally. We still had a decent amount of money in the bank. And like we had Doerr on our board, and bless his heart for still staying on the board throughout the entire time. But like, he's not used to going through like trying to refine product market fit and all of that. You have these just different types of investors or board members or even executives that like this is not the same type of skill set that they signed up for. So it must be difficult to say the least. It definitely was for me. I could definitely say we had a lot of senior executives that were like, they joined the company to scale it. And like we had Doerr, who's used to like very big numbers. And I'm sure it was extremely underwhelming where we would look at something that was being successful and in his eyes, like, this is nothing. Like, he didn't say anything like that, but I could only imagine. And then also the executives. And then eventually, like, a lot of people left. And then we did get back to a startup, like earlier stage, like team, but we still did have the big board, which definitely did not help things as we tried to pivot and ultimately the company failed.
The closest that I remember is a company, I don't want to name them, and it involves a Sequoia board member, and I just don't want to go into
Name names, Julian. Who is it?
I can't do it. I'm sorry. I can't do it.
Initials.
I'm not that rich. I'm sorry. I'm just not. I can't.
You don't have fuck you money yet?
Not yet. I can say fuck you to very few people. So
once we all do, this podcast is going to get spicy.
Then it'll really take off, not just in Finland and Sri Lanka.
But we're just naming names. Yeah.
So basically you end up with a valuation that is just that is straight up a hype machine valuation. And I think we talked about this on the podcast before, where for you as a founder, you're 100% in on your thing, or you should be relatively in on your thing. But you're one of, I want to say, maybe 3 to 5 shots a year
Right.
for a VC. And then sometimes they're really deep. But in the last case is somebody that I know and is part of the hype machine cycle like that. And the board member just literally just stopped showing up. And they were just like, I don't know, like they were on a board of another extremely hot name brand company that's public today, but it wasn't public then. And they were just like no explanation, no nothing. They just lose the board member. They get an associate maybe sometimes instead or something.
They didn't even be like, you guys are obviously not the same stage we thought you were. We're going to step off. They just stopped showing up.
They just stopped showing. In this case, just stopped showing up.
That's ridiculous.
And it caused me to start giving people, because people give you advice when you're a founder. Sorry, ask for advice when you're a founder all the time.
Yeah.
And I would often find myself saying, be careful if you get a term sheet from a very A+ something VC, because you're not that hot to them. Like they're going to see everything else.
Yep.
And so they may not be that excited about you. They might be excited now, but it's sometimes like better if it's a name of a VC that candidly will work harder. That's how I felt then. I think it's still how I feel today.
Joe, what's your experience? Have you dealt with the Sequoias of the world before on your board?
Yeah. So Klout, Kleiner Perkins led what was at the time a Series B and our Series C. Now that would be like an A to B.
Right. Or a C even an A.
I know. Yeah. So yeah, the tier 1 world, it's great when things are working.
Yes.
And there was a moment where it looked like we were going to return the fund, and everyone leaned in super hard, and
oh shit,
every door got opened, and it was incredible. And the resources that these tier 1 firms can bring to bear
it's
for
unbelievable.
The company, it really is incredible. But then when the momentum stops, you're swimming in you're swimming with sharks, and everyone was super fair, but fair is you guys aren't pulling your weight, and we're moving on. There's other companies, so they're playing a different game. And as an entrepreneur who's putting their life into it, it's painful.
It is painful.
They often talk about the bag holder. I don't know if you follow some of these Twitter accounts where like people left holding the bag of a company that they bought when it went public during some situation where it's like $25 a share, and then it ends up at $1 a share with people left holding the bag as the expression. The founder is often left holding the bag actually after these super hot situations where they're like, okay, well, I guess I've been forgotten about now. And they're like, what do I do with this? Joe, you said something a couple episodes ago. You would have been able to solve every problem except having an overhyped valuation. That can't believe stunned me. And I don't know if it's quite right for me, but it's pretty close having a hardcore valuation like this company Runway right now.
Yep.
Is one of the scariest things that you can ever happen. So in this case, in the news right now, it's this company Runway that just did a $500 million valuation. Like it must be post. That currently has $1 million in revenue. You cannot get close. You just can't.
This is insane.
Yeah. And so I don't know them, but these days I would almost rather toil in obscurity. Maybe there's something wrong with me, but all of these whole like things.
You've been through the hype cycle though, the drawbacks. Maybe I don't know the background of these founders either, but I'm guessing that they haven't been.
People silently knew my company and used it, whether for legit reasons or not. And I was never like, oh my God, this company has made it. Like, because WeWork at the time swallowed up so much of the airspace where I was. And so there was nothing that I could ever do but be like second or third or something to WeWork, which is actually like better because I could benefit from the financing of the sort of interest in the area without suffering from the downside of being in the news, like you guys, I'm sure, were at Klout and at Shyp. So in a way, like I've always had that, relative obscurity. I'm not completely like anonymous, but I almost prefer it. So I don't know what these Runway guys, how to survive that, to tell you the truth.
Yeah, I think so. This is a generative AI company. I don't know exactly what they're doing, but it's probably a take on like what OpenAI is doing. million reported in current revenue. I think that may be transactional revenue or maybe ARR, doesn't matter, but 500x multiple, that's insane. That is just, that's even crazier than like 2021 times. And so this is the next hype cycle, generative AI. And the problem with this is that you can't ever live it up to that. Like obviously there was some sort of like with the founders and the investors, it's like, we do this and this, and then this happens. And like right now, the $1 million in revenue is just like, this is the first product, the proof of concept or something. And then we do this and then all of a sudden, boom. But that it will take a miracle for that to actually happen. The downside is that they just never will live up to expectations internally or externally. So it's going to be very painful for them. And what do they really get out of it? Like the founders obviously chose to take this valuation, which I did the same thing at Shyp too. And for me, it was an ego thing. It was like, oh, I thought that we were going to be the next Uber. I was like, I should be taking an Uber like valuation. Like I should be doing that. And I optimized to get a higher valuation. And it had nothing to do with, it will dilute you a little less. Also, anybody listening in here, dilution does not fucking matter. What matters is building a successful company and having a piece of it. That's much more important than trying to optimize for that dilution. And so there's really, I don't see any real benefit. I guess the benefit you definitely do get maybe higher tier investors. I know this. So the investors that did this, very high profile, good investors. So that I would consider them tier A or tier B. You definitely get that halo that helps with recruiting. You recruit better people. You probably have a lot of, this is an engineering heavy company. So that will help, but there's very few like upsides to raising at these crazy valuations.
Joe, do you, in 2008 or something, during the Klout phase, it was a bust the way that 2001 was. And I was wondering if there was any outlier company. You might respond with like, well, we were the outlier company. It's possible. But were there any crazy outlier companies where it's like, oh my God, this is happening? Airbnb had not had them, right? Because it started in 2009. So what was the company in that era that was like, oh my God, maybe tech isn't dead type of thing? Do you remember anything like that?
Are you asking from a funding perspective where it was like, oh, wow, people are throwing real money around again and whatever?
Maybe, or it would be some version of either people are throwing real money around, or because what happened in 2001, because some of us are that old and I speak for myself, is that tech died. Like it was over.
Right.
For the majority, especially because it was the entire population that had been funding eyeballs or equivalent for so long. And so in 2008, I know the attention wasn't really on the internet. It was on other things, but I was wondering in tech, whether such a set of companies were like keeping the hype of tech vaguely alive or not.
Yeah. MySpace was like a big deal and Facebook right behind that, an even bigger deal.
Right.
2007, 2008 were like breakout Facebook, early Twitter, leading into Airbnb. And I remember Airbnb did that round. Maybe I think they did was it at $100 million valuation or something?
It was $100 million round. It was $100 million round. Yeah, I remember.
I know that was crazy at that time,
and it felt crazy at the time. And if we had our podcast, then we'd be on there saying like, "This is there's bad lessons learned here," and blah blah blah. But
the sharing economy would be the hype cycle then.
Yeah, and it was real, and those guys executed the hell out of it and built an amazing company.
Do you ever feel like we're off our subjects, but whatever, it's fine. Do you ever feel like the amount of, because you remember again, Breather's first round was like $1.5 million at a six. It was fairly humble as a company in its beginnings. And the Klout Series A, I know was like $2 million or something like that. Do you ever feel like what you're burning and spending for a single person is just wild relative to your last company? It's like everyone in the first round at Breather made like 85K Canadian, by the way, including me.
Which is like $10,000 US.
Which is $10,000 US, just to give you something exactly. Yeah. It's one Kool-Aid buck in the one Canadian Tire dollar. And I was wondering if you feel that way, but when you look at your employees today, whether you're like, oh my God, I can't believe what a one marketing person costs or one engineer costs?
It is shocking at what we pay people, but in those early days of Klout, no one made any money, but I couldn't have hired anyone who had a real job that like made real money. I just didn't have the network and the credibility or anything that I could pull somebody from a real company that like had a meaningful salary. Like the people I was getting at that point were happy. They were like me. They were just going for it. And now, yes, the economy is what it is and the market is intense and all those things. But my network is, I have really senior people who have real opportunity cost in terms of what else they could make other places. And I want to work with those people, and we write them checks to make it happen.
Yeah, the quality of the people is definitely higher. And because you can make it, if you have an A+ firm, it's funny because it's interesting because I've Kleiner during y'all's years, Kevin and Joe, and still today is a good firm, but I would consider it almost like top two. It was like Sequoia and Kleiner based off of, and not yet Excel, even though Excel had done the A of Facebook at the time. It was Kleiner and Sequoia to me were like the top two VCs.
Yep. Same here. I think that also what changed is I think startups became more mainstream.
Yeah.
So it definitely, and just technology in general. So I think that it took people away from maybe finance or a lot of those other industries. I think that what has been great for the industry, even if you, Joe, if you started Klout again, you still didn't have a network. If you were able to raise that round, you still be able to get some pretty decent people, and you still have to pay them a pretty decent amount of money, because I think that people want to join startups. They still do. They see that and I think that the right reasons to join a startup are you want to start a startup probably in the future, or you want to do something entrepreneurial, or you want to learn a lot in a very short amount of time. And I think that it definitely, because it's been so evangelized, there's been so many success stories that I think it's de-risked it from like the general population. So there are a lot more people that are willing to come and take those jobs versus Joe. I can only imagine when you started Klout, what types of people that you were getting,
right?
Because you were unknown, and like this was it. It reminded me of the year. Was it
2008, 2009? Yeah.
So yeah, the startup scene was not that definitely not frothy at all, but it probably would have taken a lot to convince people to join, even the people didn't really have a lot of experience.
Yeah. Yeah. Startups were not the cool thing about that moment. There was a movement towards it, and it was starting to happen, but it wasn't there the way it is now.
Joe, why did you ask people how many people they had in their contact list? What was the objective of this on Twitter this week?
So we're building this new app, and we are working on invite flows and figuring out how we leverage the contact list. And I was curious, can you even find people in your contact list? It was I tweeted out, how many people do you have in your contact list, and got a bunch of responses. And I personally have 270 people in my contact list, but that was, there was only one person who responded that was lower than that. Everyone, 500 was the lowest of the like median. And
that was me.
Yeah. And then there was lots of people with thousands of contacts.
Like 8,000. How is that possible?
Yeah.
How is that humanly possible?
But how many, because to me, everyone else is using, this is when I felt all of a sudden like I was missing out on something, is like a bunch of founders were on WhatsApp groups. And I was on almost no WhatsApp groups. Joe, I see you nodding there. And then all of a sudden now I'm in some WhatsApp groups, including some that are based in D's and DeFi, where the conversation is very different than it was 6 or 9 months ago. But I think that the fact that they're in a WhatsApp group, like somehow diminishes the number of contacts that you would have on your phone. Whereas for me, I have always I worked for a mobile phone company. It was like the last real job that I ever had. And I was really into phones, and back when that was a thing. Right. And so like, I've always kept my contact. I still have the contacts that I had from 1999 to give you a sense. That's why my number is elevated.
What's your number?
1,551.
Got it. I feel like we're talking. This reminds me of the Klout score. How many
Yeah,
you
just like the
got?
classic one. Yeah. But it actually, what it represents, and I don't know, Joe, if you've thought about this, but it represents a weak tie. Or did you think of it as strong ties? Because if you have a phone number, it means you really know the person.
Yeah, ideally, if you have their phone number, like we want to find your strong ties, but it was clear that it is more weak ties given the number of people. It's just not realistic that people have hundreds of strong ties.
Yeah, that's not realistic. But I would say that I'll speak personally for me, the people in my contact list, those are the strongest connections that I have. So way stronger than LinkedIn, which is, I don't even know who the people are, way better than Facebook, which is like growing up in high school and all of that. And Twitter, like Twitter is great for me. It's more of a promotional piece than I don't DM a lot of people through Twitter or anything like that. So for me, it is like the source of the strongest ties. But I wonder what does that say if you have that many, that 8,000 contacts? Is it what you're saying, Julian? It's just like, you have a lot, you're just a socialite.
I feel like you're a sales guy. If you have 8,000,
I used to have a bunch, and it was because I had linked early on in Facebook days, linked my Facebook account to my phone, and it pulls all your Facebook connections into your phone. And I think you could do the same with LinkedIn and all this stuff. I had backed all that out many years ago because it was a mess. But if you didn't fix that, it's an easy way to get thousands of connections.
Do you believe, Joe?
Yeah.
And we know a little bit about what you're trying to go into, which we will not get into, but there was always the thought that like you could use your address for all these new social apps, that you can basically like move to different social applications based on your phone book. Is that the case? I remember, I don't know why this is coming up, but do you guys remember the app Secret?
Yeah.
Of course.
Yeah, of course. I remember, that's maybe another hype cycle as well.
For the people in Finland and in Sri Lanka, give the context for Secret and what it was.
So Secret, I remember it was such a huge viral app. It was a consumer app that you can basically type in anonymous messages. And I don't think there was any topics on there, but it would connect you with your friends. There was some sort of light connection, but it was all anonymous. And I think eventually what happened is it got into a cesspool and people started talking a lot of shit, and I don't know if that's one of the reasons they shut it down, but I thought that I remember the onboarding flow is like invite all your people. And then it just one of the first apps that just sucked in your contact list, and they jumped up really quick. And I can't remember what actually happened to that company though.
An old buddy of mine, Greg Eisenberg, went into social, and when back in the day, he started like a few social companies. And the people that start in social, and Joe, I'm looking at you like, sometimes on this podcast, we like to talk about politics or anything like that, but we refer to Elon Musk as eating glass. And I think of the people that are in social as they eat glass. I can't think of a more difficult category than eating glass. Brings us a little bit to our other subject, which is the subject of investor updates that we've ended up talking about this week.
Yeah.
Maybe I'm the only one. I really believed, here's what I heard on Twitter back like in 2012 or something like that. In 2012, which was 10 years ago, people would say, if you do your investor updates, if you stop doing them, it means your company is not doing well. And so if you do them, even if you don't have like board meetings on the regular, which at Breather I did, and today I don't, I do investor updates on the first of the month. If you're one of my investors and maybe listen to this, or if you're one of my investors and you're out there, I send investor updates on the first of the month. Once I get a real board, i.e. at the Series A, I stop sending them. But in that seed stage phase, to me, it's like the one amount of scrutiny and the one amount of outside accountability that you really get. And I really believe that it tilts in the direction of helping the company, if only because the founder for 4 weeks or an average of 2 weeks, let's say, is not going to be buying their own bullshit. I actually, one time me responding about churn rates, and I put a churn rate number into the investor update a long time ago. And they were like, this is not good. They were just saying, and I'm so happy to fucking hear that. It's easier and easier styles of company, like SaaS. If you run a SaaS company, lots of people run a SaaS company. So it's an understood
Standard
thing
rate,
that people can give advice on. Not so much on like anonymous 1 hour meetings basis. And so I was wondering how you feel about the investor updates and whether or not you hold yourself to any kind of routine or whether you don't care.
Julian, but I'm curious, in your current investor updates at the seed stage, what are you generally talking about right now?
I follow a best practice, which either I got from a Sequoia or Kleiner Perkins like website about how to do a board update. And I use the same routine, which is talk about product, talk about traction, talk about the team, and then talk about like the burn rate / fundraising / numbers. And all that I do is I do that, and then I front load it with an ask to investors. And it is true. We chatted throughout the week about whether people are responsive or not. It's true that when you have a lot of investors, kind of like people like don't respond, I make an effort to respond myself and I ask for specific things. But every investor update starts with a request to people. And that's my thing. And I've been doing that for a really long time now, certainly like for years. And I've always done it. And I actually like it.
For me, I actually followed a very similar style to you, Julian. With Shyp, I just stopped sending them because I thought I was too good for them, honestly.
Yeah.
Like that's where
you and fuck that.
that's when you're in the hype cycle and you have celebrities on your cap table and you just think you're better than everybody else. Stop sending them. My rule is very similar to yours. I think that it is the one time, especially if you don't have a board. So like for second time founders, typically during the seed stage, you don't have a board. I think it is the one time that you could take yourself like out of running the day-to-day business and reflect and get some feedback, even if it is just to write out and take the time to write it out and you don't get any feedback. I find that very helpful, but I did the same thing. I was very thorough with my investor updates during the seed phase, but then after seed phase, I turned them into more of a more of a marketing. Here is what we're up to, refer us customers. We're also B2B too. So one customer can be worth like millions of dollars to us. So I use it more of like a marketing piece. And I also only send them once per quarter now, but there are a lot of people that have very strong opinions. So the reason we even brought this up is that Jason Lemkin, he's a SaaStr god, he runs the SaaStr conference. And his tweet was, in tougher times, send investor updates even faster. I'm already assuming any I haven't gotten for November are bad. I don't know if this is just that he invests a lot in seed, and he's obviously a very mature investor and a very great investor as well. It was interesting to me. Do people on the investor side expect to get those investor updates even after an actual formal board is joined?
Yeah.
And if that's true, I have very strong opinions against that because myself, I've gotten so many competitors, either investor decks, their runway, their monthly updates, anything from other investors that maybe even be co-investors. Like once you figure out a certain amount of things and you're becoming more successful, I don't see the true value in really like giving the full, like what's actually going on in the company. Because I think anybody that hasn't run like a venture backed company, the amount of stuff that people send you about your competitors or whatever, or even just, it's wild. Even board members on that same company talking trash. Like I had not a competitor to us, but like, he's just talking trash about his portfolio company and how they're doing shit. I'm like, for one, I just met you and this is crazy, but like when you're outside of Twitter, the amount of information sharing that investors do is crazy. So my feeling is that when you get to a certain like scale, which would be Series A to B, like you need to protect that information because you are going to have competitors. And I would rather get like an extra 1 to 2 years on them.
You are so right. I'm curious to the two of you, Joe and Kevin, how, first of all, there's all these emails from investors, okay, that come between financings. I just got a few over the weekend, more than usual. And you can't respond to all of them, and you probably shouldn't respond to very many. But then when people ask you, because everyone, especially in venture, is information gathering all the time.
That's all they do.
And that's literally all it's an information asymmetry equals dollars in their bank account or lack of dollars wasted, and it equals IRR. And if you are looking at, let's say you have one of these calls because a legit fund reaches out, or a fund you like, or some other thing like that, and you're like, oh, and how's your numbers? Because mine would be, and what's your ARR right now? Or what's your number of customers? I have this specific response, because when they try to do their information asymmetry thing on me, I just refuse, no matter what it is, whether my numbers are good or bad or anything like that under all circumstances. I say, and I advise my coaching clients, by the way, to say, we don't talk about numbers between financing. And I was wondering what your attitude is to their information gathering process.
Joe, what do you take this one?
I'm laughing because this is probably will come back on me some way in the future, but
Yes, spicy. Hit us.
Yeah, if it's an investor, I know I'm like very unlikely to work with in the future. And there's a competitor I know is out fundraising, so I know I'm getting hit up on these numbers.
Yes.
I'll float some like ludicrous numbers just to set the bar
Oh,
so
shit.
high.
Joe is playing 4D chess.
Wow. This is, what do they call it in politics? They have an expression for it. Whatever. Information warfare.
Why do you do that,
Absolutely.
Joe? You want to crush a competitor's dreams, or why do you want those crazy numbers?
No, I don't know. It's just I don't know. It's a sickness.
Yeah.
Just to float some big numbers, and it's that I know they're like unlikely to hit and set the market so high that it just sucks the air.
Wow, I love it. That's
a secret, right?
Aggressive strategy. Yeah, I wouldn't have expected that from you, Joe.
Kevin,
That's
what
awesome.
do you typically answer when you do it?
It really depends on who the person is. Yeah, it's very similar to Joe. If I just won't answer, I don't make up numbers, but I just will say we're not talking about it. If it is somebody that I'll hope to raise, I'll probably give like a future projection. So like by the end of the year, we'll be doing X or something like this. So we can seem a lot larger than we are right now, but not give any specific numbers. I don't think there's anything to gain from sharing your actual numbers. What are they going to be using it for? They're not writing you a check right now. It's unlikely that they would preempt you, which I guess they potentially could if numbers are good enough. But then if your numbers are good enough, you should be going and raising around anyway.
You should be doing a process.
Yeah, exactly. So there's really little upside to really sharing those.
Yeah.
But it is good to let some people know you're on track. My feeling anyways, you're on track to hit this by the end of the year if all things go well or something like that, to get them excited for you to then in the future pitch them when you're actually fundraising.
Joe, it does bring up, you brought up something that is also always happening, is which whenever you take these calls, I actually explicitly ask at the beginning of the call, are you guys looking at a deal right now? Because I want to know. Sorry. Are you looking at a deal in my space right this moment? And that's why you're calling me. And so that particularly for me, I have that attitude of, I want to drive towards giving numbers during financing, but it seems like you guys are much more open than I am, for sure.
Yeah. And again, my thing was like heavy caveat. A firm I know I don't want to work with, and then a competitor I know is how raising. I'm just creating noise and like muddying the waters.
I love it.
But like,
I might steal that. That's so good. But as a side note here, I'm curious if the point of Jason's tweet was that he's expecting investor updates until what your Series B, Series C. I've definitely had that as
No.
well. No, man. There definitely are people like that. Why'd you stop sending the updates? I'm like, we have a
Mhm.
board of directors. I'm an
Mhm.
investor in the company. I still do that. And then I literally
Yeah.
just cut that person out of my life. I'm like,
Yeah.
you're not providing
This
any
reminds me,
value to
Kevin,
me.
why is it you haven't sent an investor update recently?
I send it quarterly
actually,
now.
yeah, I'm grateful that you send them at all. You, a company Ashby that is at Series B,
Yeah.
these companies that still send investor updates at that size, I would say that it's needed, but it's impressive when they do it. I will say that.
To be clear, I use it just for my own personal benefit of
Yeah.
selling the product and and then they'll tell other people how great we're doing or to get additional people to hire. But yeah, it's wild the expectation. This brings up another thing that I heard Parker Conrad, who he was the founder of Zenefits and now Rippling. He responded, or his co-founder did, to a similar tweet around, should you be sending investor updates at all? And their response was like, we took a hard stance. Like they have sent 0 investor updates ever.
Wow. Wow.
Yeah. And like Rippling is doing extremely well. So I also don't think that there's a total correlation to doing it one way or another. I think it's just people's styles. And also probably coming from Conrad's experience, like he got fucked at Zenefits. So like he probably has an axe to grind with investors and he probably wants to share less and keep a tighter control of everything. So that may be one of the reasons. Maybe he didn't send him to Zenefits either, but I definitely don't think that like what Jason tweeted, and I think Jason Calacanis actually, he said, yeah, that's also true. I think the same way. I don't think there's a correlation there. I do not think that the companies that stop sending updates are like doomed. They may just be doing extremely well. To be honest with you,
that could be you are going to get if there's a delay in these investor updates, one of about 3 things is happening.
Right.
One is like your co-founder is leaving, or the co-founder is leaving and you haven't been told yet. That's one of them. Sometimes it's the main one. Who knows? And then the second one is this is high profile and it's going well. And they're about to announce a financing, but they haven't announced it yet. And then the third one is just this this company is not doing well. And they're trying to put off the bad news instead of typically just like my attitude, which is just no matter what it is, just tear. And that's why I send it on the first one. If I've got good numbers, I'm happy to share them. And if I've got bad numbers, I want to rip off the Band-Aid as quickly as possible because if you're a founder and you're listening to this, if you're especially a CEO founder, you want to confront reality as directly as possible. Every single day, no matter how fucked up your fucking life is.
Yep.
You must confront reality quickly and you have to have it slam up against you so you cannot be in denial. It's really important. Someone gave me a piece of, we had miscalculated MRR last month. And by a meaningful number, I was like, oh, this is not, and I sent the wrong number to investors. And it actually I said to this person on my team, it wasn't a big deal, but I said to this person on my team, oh, I'm so happy. I knew there was something wrong, but I'm sure I didn't really understand exactly what it was. Now I know. Thank you for telling me. Because I want access to reality as directly and clearly as possible.
And you'll also be surprised that people, when things are not going well, some people will actually take the time out of their day to try to help as well. You'll be surprised. Now, that's probably going to be a very small percentage of investors. Most of them will think, fuck, this company is done for or whatever. But like, there will be some people that are like, I could think that I believe in what you're doing, but this is just a blip in this, and maybe I could help. I think that's the same. I think I definitely apply that to the board. Where I think especially like first time founders, you like to, I don't know, it's very uncomfortable to tell everybody the bad news, but especially your board, be super open and honest with them, good, bad, and ugly. They're there to help. And also you will get more trust from them as well. If you are trying to hide something or delay telling them and it comes out a lot later, you've now just lost their trust. And that's not good for anybody. So always tell the bad news up front if there is going to be some, and there always is some bad news. And I think it's best for you, as Julian, as you mentioned, as a person, just confront reality, but also to build trust with your investors or whoever, or your team as well.
You're very much saying, Joe, I'm curious about your take, that put yourself at the mercy of your board.
Yeah.
Is that right?
Yeah, totally. I think that's the time that you should reflect and get feedback, and they also should be there to push you on things too. Like I definitely respect earlier on, I'd say at Shyp, I had a much higher ego, and I thought that everything that I was doing was probably right. And it was just like, I'm doing these board meetings just because you have to. But now I'm like, these are people that are on my team, and I want them to be there to help when things get tough. And also, even selfishly, like telling people the bad news, you're going to build a better relationship with them. They're going to be able to trust you a lot more. Then hopefully you do improve things. Obviously, if you don't, then you're fucked anyways.
This is a very mature long-term view.
Yes,
Joe.
exactly.
Joe, talk to me about how you feel about how you manage information, if at all, with your board.
Yeah. So I have I don't know, I guess mixed reaction to investor updates. At Klout, we had crazy leaks. We were a really high profile company. And just like anything that went out to investors, like the next day would be like in Business Insider.
Wow, that's crazy.
And so it was really frustrating. So I had to rein things in quite a bit. At Joymode, I put a lot of effort into investor updates. While I have some kind of pent up frustration on sending out these investor updates and not hearing things from investors, when ultimately the company didn't work, those investor updates, I think, bought a lot of, I don't know, gratitude from the investors. Like, that no one was surprised that they just heard from me at the end and was like, hey, sorry guys, it didn't work. Like they were along for the journey. So they knew how hard we tried. They saw the list of things we attempted. They saw the stats, the ups and downs, everything. So it was worth the effort for sure. In my current company, I would say I'm sending them kind of quarterly.
Sure.
I would like to do them more, but we've just been in this building mode for a long time. So it's like I think we are getting to a place very soon where we will have something in market where there will be a lot more to talk about, and I want to do them more.
Yeah, I'm excited for that to be the case. It's interesting. I wonder for repeat founders like ourselves, like a Meta, who started Instacart, just now raised, I want to say, $30 million for his next company because I don't exactly remember the timeline, but he left the CEO role at Instacart, I want to say almost 2 years ago, and replaced himself with a longtime consigliere or whatever, right? And now he raised a $30 million seed at a $300 million valuation is what I feel like. And I'm wondering whether at that stage you're just like, fuck it, and you just never send an investor update again. Or whether, I don't know, there's a rarefied, elevated.
There's levels to this game.
Yeah. It's interesting. I was on a plane yesterday and as a short anecdote, the pilot, they're landing and they almost land. And you know how the plane decelerates as it's almost landing, and then it's recelerating and it actually takes off again.
Fun.
And I'm in the middle and everyone on the plane is really packed. Everyone on the plane with almost no map, by the way, out of curiosity. I had one, but somehow others did not. And so everyone suddenly realizes what's happening, and the pilot comes on. And he's like, hey, as you noticed, we didn't land. Anyway, I don't really have time to talk about why. See you later. So we did land, obviously, but that rarefied air up in the high stations where the people who founded Instacart are, and then started another company. What are their routines? What are their standards? How do you think that they're running their business?
I don't know. I think that's a whole nother level, right? Like Instacart's worth at least $20 billion. I think and they were relatively successful coming out of the gate with the product that they had. I know Purva's story a little bit. I know him a tiny bit. He definitely went through a lot of other startup failures before. But when you get to that level, like this is like the Travis Kalanick level with his his cloud kitchens after Uber. Do you just not give a fuck? Also, there was a hint of that in that article that he started this new company that He was kind of a poor from Instacart. He was pushed out of the company with disagreements from the board. So he may have a negative sentiment towards VCs. So I would guess he's not probably sending out an investor update.
It's interesting because like my attitude, I've raised a lot of money in my career in a short period of time, but my attitude is you're entering with venture capital you're entering into a Faustian agreement. If you don't know what that is, look it up. You're entering into a Faustian agreement. You're aware that you're being used as a tool by investors, and you are deliberately entering into that agreement to be a tool.
Right.
And so long as that's understood, it's okay. So people like that are entering into it deliberately. It's very different than first-time founders that are doing it or taking whatever happens to be able to get them to their next stage or whatever.
Yeah, no, you need to respect the game of everybody on there. But I think just putting myself in Purva's shoes, or Travis also from Uber, so both extremely successful, and they've been essentially, this is reported by Purva, both of them got pushed out of the company. If that's the case, like you are the founder that actually created that, still super successful. It's not like with me with Shyp, it went to zero and I can only blame myself, but ultimately, but they created something and they didn't agree, the board didn't agree with their decisions or the direction they want to take the company, and they were pushed out of their company. And now they're still wildly successful. Uber is a very massive public company. Instacart's going to be public soon too. So I think that's definitely a lot different. The relationship that they would have with probably the venture industry, or specifically those board members, I'm sure that they're not on good terms, to say the least, because the company they created, they were essentially pushed out of. I know that's the case with Travis. Like there's a Showtime show about it, about the frictions that they had there. Yeah. So it's a lot different if it doesn't work out. But yeah, venture, you got to know what you're getting into when you start doing this.
Joe, why do you keep doing it over and over again? We talked about this a little bit, but theoretically you could bootstrap a thing. You're doing like a social thing. Like it's not like, it doesn't involve a lot of CapEx. You could just be like, fuck you and everyone and everything. And you're deliberately entering into the agreement, the Faustian agreement again and again. What prevents you from feeling, and some people feel very fucked over. And it brings us into our Revenge of Capital article that was posted by, I think, Charles Hudson this week. Yes. But I'm really curious what you do going back deliberately, knowing you have other options.
Yeah, even worse, I go back and go into consumer, like not even smart enough to go back and
so stupid. It's so fucking, but like deliberately knowing what you're doing.
Yeah, it's not to sound cheesy, but I just can't imagine anything else. I want to build things that impact millions and hopefully billions of people. And that's what really motivates me. And I've tried to like rationalize with myself why that's a poor use of my like soul, just the beatings we take in doing it, but it hasn't stuck yet.
So what is your swinging? Those of you that can see the background can see that Joe's in a really weird building at the moment. And we know the history of the building. He can tell it if he wants or not, but I was wondering, just this curious thing, before we go into this final chat about this Revenge of Capital, what is it that keeps your soul like alive while it's being destroyed by consumer technology companies? What is the thing that while you're doing this, my thing is nature and surfing and other things like that. That's what I do when I get step away from the keyboard. What are yours respectively, Joe and Kevin?
So yeah, what do I do to like get a break from this? Have kids.
Yeah.
That's fun. Amazing. Mentioned that last time, but boxing's a fun thing. Just like fighting.
Kevin.
What was the question?
Okay. How do you, in order to keep, you're excited about running your company, but also when you step like away from your keyboard, you need something to keep your soul that balanced, right? And so I was wondering what it is that you've returned to like again and again to keep that going.
My family and friends. That's really all I got. I play hockey a little bit here and there, but the majority of my time is really just spent on, I really love building companies.
Yeah.
I love building products, and
you gotta love it. You do.
You have to love it. And I say if I had a weekend alone or something like that, I'm going to probably work on my company. That's how much I love doing it. And that's why I want to continue doing this. There is
So,
something magical about just building something from nothing.
and have it with
And it's
exciting
addicting.
people, with
Yes,
exciting
exactly.
people that are
Totally.
great and that you really like spending time with. It's when people talk about work, I remember being really cynical about work in my teens and 20s and the idea of what work was and how it was just deliberately soul crushing. In some cases, I just found it, and I happen to be in one of them, maybe, where I just don't feel that's true. And hopefully, if you're listening to this, you found something as well, and you don't find it so soul crushing, and you can continue. Here's the article from Charles Hudson. So Charles Hudson, in case you don't know him, I think a while ago, he worked for Jeff Clavier, if I remember correctly.
That's right.
His fund. Now he works at Precursor VC. And he wrote this article, which went super wide, which is about the revenge of capital. And I'm going to quote the article for a moment. And so he says, right now, I think we're living through what I call the revenge of capital. I don't know a better way to describe it in my conversations with GP and LP. It's an abrupt, violent rebalancing towards the preferences of capital providers up and down the stack. And so what he describes as it is not purely rational. It's based on the good quote unquote years for founders over the past couple of years. Now, capital, basically the holders of capital, GPs and LPs, are like, fuck you. Not just actively like returning to rational numbers, but actively being super upset. And it is the release, he says, of all the pent up frustration, anger, angst, and anxiety. None of us have raised during this period, by the way. Andy is closer to raising. He's not on the call because he's on a board meeting right now. But the rest of us have not had to raise. I was wondering if you feel that angst from the investors that you talk to. I personally have known of some funds that are maybe not able to raise again. And I see a lot of people that are, some people that are maybe considering alternative professions. I was wondering if you have experienced any of this revenge of capital yourself, directly or indirectly.
I haven't yet. I read that. I thought it was sad, honestly.
Yeah.
It's like the VCs ultimately were the ones that put us here, for not any individual VC, but the industry as a whole. There was just so much capital that flooded the entire industry, marked up these companies in ways that weren't sustainable. And now everything has come crashing down. So the venture industry did it to itself, and also the founders that participated. But for reading this, it's, the founders that may not have participated in this, they're going to get they're going to get the brunt of it. They're going to get these 2 to 3x liquidation preferences on their rounds. And it's my other companies didn't do, I got fucked over for them. So I'm going to take it to these companies. It's pretty sad if that's the actual view of an investor. And for somebody like Charles to share that, it's obviously true. I hate to see it. And to me, it's just like, I know this now going into this. I got into venture. I know the game, what I'm playing. It's everybody's betting that we're going to be an outlier, and that's who makes the money for these VCs. And if you're not going to be as important. And I realize that going in. So it sucks on the other side. It's, there's so much capital going around. You as a VC could have also chosen not to play, which I know many VCs, they were like, valuations are too insane. Actually, going back to people who didn't choose to play, Jason Lemkin was very vocal around, he's just, I don't see how these like SaaS multiples make sense. I'm not going to be investing. And he didn't invest in a lot of companies. And you could say that he missed out, but probably looking back, he probably is going to have a very good portfolio. And so he made the decision. I know a lot of other firms that did that, but other ones, I think that I don't know if they're pressured to just still deploy capital. There's also this really weird structure with management fees. So like you raise a fund, and typically 2% of that fund you get to use on the salaries of the actual venture partners a year. And so you're incented to raise larger funds, continue to deploy capital, do markups. So I don't know if it's from people like that, but like at the end of the day, you as a VC could have chosen not to participate. So I don't know where this revenge is coming to. I think that you definitely should be taking revenge on the founders that were going and buying jets and all the grifters out there. Yeah, they should not, fuck them. They also had an equal, if not even a larger part in this where we got to. But to kind of have that sentiment going forward for this next generation of founders, I think it's sad
Joe,
to
did you
see.
you raised last year before any of this happened? Is that right?
Yeah, we raised, yes, last year, 2021.
How did it feel relative to what you're seeing now?
Yeah, now it looks rough out there. And 2021, I think everyone would agree, was peak, peak FOMO and whatever it was. And it's just this idea, shit rolls downhill, and GPs are mad at VCs, VCs are mad at CEOs, CEOs are mad at employees, and everyone's like,
They're mad at customers.
and I think it does continue. These GPs will beat up on the VCs. VCs come and say, not going to play your games anymore, CEOs, and we're going to put some terms in here you might not like. And then CEOs go back to work and cut a bunch of people and take a bunch of just amenities away from the team, and just the cycle.
Yeah. He ends talking about capital as allocated to people with feelings. And it's interesting, like, in doing financing, I have always been like, I have to get the emotions of the person. And that's my primary job. So I always have thought of it that way. And then I thought the expression, the way that it was driven to me by a VC, probably somebody that I worked with, I think, said, in the first meeting, you have to get them to fall in love with you. In the second and subsequent meetings, you have to get them not to fall out of love with you. And
Great advice.
me,
Great advice.
Yeah. I know when I heard that, I was like, wow, that is sharp. So I have a few nuggets like that I've pulled out of people over time. And so I have always been really clear. It's why I run processes the way that I do. It's why I advise people in the way that I do, et cetera. It's just about driving emotion. I'm always about driving emotion instead of driving rationality, precisely because of what Charles Hudson says.
Yeah.
And I think that's maybe a good way to end it for anybody who's listening. First of all, everyone who's on the call, do not close the browser.
Yes.
Okay. And
We'll
then,
see you next time.
I'll see you next time. Anyone who's listening, just focus on driving emotion, not on driving rational decision making.
And subscribe and like all the channels. Will help us out. Bye.
Bye-bye.
Yeah, we keep it real and we bring you the facts. It's the Second Time Founders podcast. Talking tech news, the show is a must. Not some billionaire trying to sell you their book. We coming from a real place, plenty ups and downs. Got some insights, join the discussion now. We being honest and raw, giving you real talk. We've been at the bottom and made it happen and much more. The Second Time Founders podcast. More building, less talk.